All right, let's get right into it. Bitcoin is standing at a major fork in the road. The entire market is, frankly, holding its breath, waiting on a single decision that could either rocket us toward new highs or, well, send us tumbling down. Let's break down exactly what's on the line.
And no, that isn't just hype. We are talking about the Federal Reserve's big decision from the FOMC, the group that decides where interest rates go. For anyone in crypto right now, this is a moment where the path splits, and the two directions lead to completely different places.
So, you've got one decision, but two very, very different futures for Bitcoin. One path is the one everyone's hoping for, the bullish case. The other, it's a high-risk curveball that could catch a lot of people off guard. Let's dive into what each of these scenarios actually looks like.
Okay, let's start with scenario 1. This is the one the market is betting on. This is the expected outcome, the bullish path forward.
And get this, 87%. That's the probability that the big money, we're talking institutional traders, are pricing in for an interest rate cut. That is a massive, overwhelming consensus, and it's what's fueling a lot of the optimism you're seeing right now.
And you can see just how lopsided this is. Almost everybody is piled onto one side of the boat, betting on that rate cut. Which, makes you think, what happens if that tiny little 13% slice is the one that actually comes true? So why is a rate cut such a huge deal? Well, think of it as a massive green light for the market. It means lower borrowing costs, which brings back what we call cheap money. This basically validates the whole risk-on environment where assets like Bitcoin tend to do really, really well. It's a signal to investors that it's time to seek higher returns, and that could unlock a whole new flood of institutional cash.
Now, if this bullish scenario does play out, there's one number everyone's going to be glued to, $98,000. That's the key resistance level, the next big wall that Bitcoin would be on a direct course to test and hopefully smash right through.
But what if that 87% consensus is wrong? What if the market has this completely backwards? Well, that brings us to scenario 2, the bearish surprise. It's the outcome that very few people expect, but pretty much everyone is afraid of. And this is the real danger here. The probability is low, sure, but the impact would be absolutely massive. Why? Because so few people are actually positioned for it. A shock like this would trigger a violent reaction in the market. If the Fed decides to pause rates and not cut, it sends a chilling message. It says, hey, we're still really worried about inflation. Money stays expensive, liquidity tightens up, and investors start shedding risk as fast as they can. That would almost certainly trigger a big sell-off in assets like crypto, completely flipping the current trend on its head.
In this bearish world, we're no longer looking up at a target to break. We're looking down at a floor we have to defend. And that critical floor is $80,000. This is the support level that would come under immediate and intense fire.
And this is why it's so critical. A break below 80,000 isn't just a bad day at the office. It seriously compromises Bitcoin's entire long-term technical structure. It could signal that a much deeper, more painful downturn is on the way. So let's just lay it all out, side by side. You have the bullish path, a rate cut, a risk-on signal, and a run at 98,000. And then you have the bearish surprise. Rates hold steady, a risk-off signal, and a desperate defense of 80,000. Two completely different worlds, and it all hinges on this one decision. So the big question is, what do you do about it? How do you navigate this? Well, the smartest move isn't to try and predict what's going to happen. It's to prepare for what could happen. And that brings us to a clever little strategy known as the accountant's hedge. I love this concept, the accountant's hedge. It's all about a change in mindset. You stop acting like a gambler, trying to bet on red or black, and you start thinking like an accountant, carefully managing the risk for both potential realities. And in practice, it's a pretty straightforward two-part plan. Part 1 is your offense. You have a clear strategy for what to do if we get that breakout toward 98,000. Part 2 is your defense. You have your stop losses set and ready to protect your downside if things go wrong and we test 80,000. You're prepared no matter what happens. So, as we get ready for this high-stakes moment, what's the most important thing to remember? It all boils down to one simple word: preparedness. This quote really says it all, doesn't it? When you're facing a moment like this, where one event can cause such a massive swing, trying to guess the outcome is a fool's game. The only real strategy, the only real defense, is being prepared for either outcome.
The market has definitely placed its bet, but the real question you have to ask yourself is, are you just betting too, or are you truly prepared for both outcomes?